So once again, we're going to be talking about buy and hold investment strategy. This is one of the first strategies that I actually jumped on, and I'll give you a little bit of context in a bit why I chose this strategy, because you have to evaluate where you are in your life and what your capacity is. So to give you a little bit of context for those of you that don't know me, I am a real estate agent. I am a global team leader with the eXp Realty brokerage. I originally came from almost a decade in working for marketing consulting. That's where my background is. I worked for not-for-profit to start off, and then I worked in government for a number of years, and then with a few private brands. And now I'm working with real estate agent. eXp Realty gave me this unique opportunity to do the work that I've been doing for over a decade, and to now share that with real estate agents. And like Kyle said, I actually did start in the industry as a real estate investor with my husband and I. And the reason why we wanted to get our license was because you'll realize that you are a project manager and you need a lot of information. And I'll get into a lot of it in a second when you are investing in real estate. And it's so hard to get that information when you don't have the right real estate agents. And I worked with a number of real estate agents, and I just wanted to get my license so that I had access to that kind of information. So instead of sending, because there was a time when you become a real estate investor, even if you're not a real estate agent, you're seeking your own properties. You're driving around, you're seeking properties, and you need back-end information. And instead of sending different properties that you find to a real estate agent and asking for comparables, back-end info, when it was last listed, can you send me that info? It wasn't user-friendly for us, and it wasn't helping us navigate the industry in the best way possible. So we got our license, and it'll help us close deals in the process for us and our partners. And I'm top 3% in eXp Realty for revenue share organization, which Kyle will touch upon in the second half of our training. And one of the, I was reading a Forbes blog recently about the buy and hold strategy, and it says, you don't buy and sell, you just buy. And we'll get into that again in a moment. So you're probably thinking, what is a buy and hold strategy? It's a real estate investment strategy, just like there's many others out there. This is a strategy where it's commonly used by a lot of real estate investors. It really is a process where you're seeking to generate recurring rental income, where you can build wealth over time. It is one of the strategies a lot of people use as a generational wealth income strategy. This is where you buy a property, a rental property, an investment property, you hold it for 5 years or more. You can refinance if you like, or you can sell it. Again, you try not to sell it, but sometimes, depending on the market, if it's working in your favor, or if you're in a sticky situation with a JV partner or someone, or your own partner, and you need an exit strategy, then in that case, you might want to sell. But usually 5 or more, and you want to keep it for as long as possible. And this strategy is really unique because you can combine it with other investment strategies like BRRR, where you buy, rehab, you refinance, you rent it, and then you can hold it as long as you like, or you can even flip, rent it, keep it. So this strategy can be applicable to a lot of other strategies. And what you're going to learn today is, I know that we have people that will trickle in that are from other parts of the world, like the US. We do have people from India that trickle in here, from Puerto Rico, Spain. So this is a very universal information I'm going to be sharing with you. It's really is a nucleus strategy that you can implement in a lot of the work you're going to be doing in real estate. And one thing I know there's a lot of, this is meant for real estate agents. So this is going to be applicable for you personally, but it's also going to be applicable when you're talking to real estate investors. So number of ways why this strategy and why real estate investing is the right thing to do, why there's ways you can win. There's 6 ways you can win. There's cash flow. You can make money from it, monthly, yearly, etc. It gives you the opportunity to pay down your mortgage. And also there's a potential for your property to appreciate over time. And then there's other ways where you can force appreciate it, where you can go get renovations done, efficiencies, upgrades, and have the value go up on its own, so that when it comes to refinancing, you were able to take more out of that property's equity. And then there's tax advantages. The beautiful part is a lot of the expenses that you spent on this property is, guess what, it's a business. So you're able to claim all of that. And that even if you buy a property, and this is something that I highly recommend all of you explore, is when Josh and I, my husband and I, when we started investing in real estate, initially we held them personally. But remember, this is a business. If you held them personally, there comes a lot of liabilities. So this is something that you want to sit down with your accountant and lawyer and figure out what is better for you. But I highly recommend you explore this option if you want to do this in the long term. A lot of people say, oh, I want to get into real estate investing, and they go and incorporate, and then they only do it for 1 year, and then there's a lot of massive loss in their cash flow because of the amount of expenses that come with incorporating a business. So I highly recommend, if you're going to be doing this for a long term, rinse, repeat for a long period, build a large portfolio, then maybe incorporating and putting under a corporation is something that is applicable for you. But again, I'll leave that to you to explore with an accountant, a professional accountant and lawyer. And I'll talk about who these people are and why you want to choose them strategically in a moment. And again, the other way you can win in real estate is leverage. You can refinance your property and you're able to pull equity. I was able to, I don't want to say retire from my work, because I will say I retired from my 9 to 5 because of my investment property. So I was able to refinance my property just before I left my work. I leveraged my full-time job to pull out equity at a really interesting and a really active time when the market was at a high, and I was able to pull out some cash value prior to leaving my full-time job. So you're able to do interesting things like that and take advantage and I'll show you some key indicators that you want to keep an eye on in order for you to leverage this. So this is where you want to look within yourself, and you want to understand, who are you? Where are you? What is your role in this project, in real estate investing? What is your capacity? Some of us are parents here. Some of us have other partners who are investors or are have other full-time jobs who might not want to help us out with investing in real estate. So you want to make sure you sit down with your partner, make sure you're on the same page. I have business partners as well as friends who wanted to get into real estate investing. They sat down with their partner and they got immediately shut down, because real estate investing, I'll tell you this one thing, is that once you start investing in real estate and your mindset start to change, and the way you see life will change, and even your circle of people around you will change. Some people just won't understand. They'll look at you like you're crazy. I had really close friends of mine at dinner table tell me that I'm putting all my eggs in one basket. And at the end of the day, they're still at their 9 to 5. I'm not. So I think you have to do what's best for you. And sometimes if you're somebody in the family, in your little circle that is kind of seen or understand what real estate investing can do, and if you're interested, really go do a little bit of research and figure out, that's that pre-investor stage. This is where you get a little peak of interest. You see people have the right amount of cash out sitting on equity and they can do something with it. And this is where you want to have these conversations, these open conversations with your partner. And you want to take calculated risk. Real estate investing, any investing is a calculated risk. It's just some of them, like buy and hold, is a little bit more of a larger return, let's just say, and less riskier than something like stock, where you might have high returns, but there's also high loss, and quickly as well. And the other thing is, you can be a passive investor. How much do you want to be involved in this? There are people, for example, Josh and I look for JV partners. So if you're someone who are sitting on equity, you don't want to do anything, you want to just give me your capital, you want to partner with me, I'm happy to take on that capital for you and manage your portfolio. So Josh and I do things like that as well. So either you can be a knowledge partner and be the one driving and not have to use any of your own money. I'm talking $0 out of your pocket, and partner with people and put a JV agreement in place with a lawyer, with a real estate lawyer. Or you can go and put in your own capital, manage your own portfolio, and be an active investor. But again, there's also a different understanding of what an active versus passive is, because you could also this is what a little bit of Josh and I are. We're passive investors. What that means is the daily operations of our portfolios, we don't look at. I'm not the one to call the plumber. I'm not the one to call the technicians, none of that. My property is being resolved and taken care of by property management companies, but we're active investors in that sense. I'm overseeing the property management company. I will never want to see a bill that I'm not aware of. Does that make sense? So you're always in control of your portfolio. The other thing that I want to now talk about, this is, if you remember anything out of our presentation, this is going to be the success formula for the roots of your investment portfolio. How do you determine where you want to invest? I highly recommend you take a picture of this, you write this down. These are the economic fundamentals that will give you a clear indication. I'm telling you, real estate investing has nothing to do with emotions. They're all logic, they're all research, facts-based. And if you do this correctly, you will have a pretty good portfolio. And this is where you're going to determine key drivers in the market, the market factors that are going to help you propel the real estate market to help survive this property in multiple different real estate cycle. And one of the books that I recommend that you guys look into reading is where it touches on a lot of this, is where you can kind of make notes of. I don't know if you want to write this down or we can talk about this later, is I can put it in the comment section, is by Don Campbell. It's called The Real Estate Investing in Canada and the Secrets of the Canadian Real Estate Cycle. I highly recommend that you read these books. Yes, some of them aren't quite as applicable in today's market, because today's market, as you guys know, is a little bit, it's not, nobody's predicted this. So I will say that, but the idea of the real estate cycle is very, very important for you to understand. So, which is why a lot of these key indicators come in. So one of the things, when you look at a different area to invest in, you want to look to see an area that is a town or county, a region. For example, let's say the Grimsby area, let's say the Scarborough, let's say the St. Catharines, an area within a region where you want to look at, has this touched the ripple effect of Toronto? So you want to find a town that is near a really booming city, but hasn't quite grown yet. If it's already grown, it's surpassed the peak point of the growth. So you want to go somewhere that has a lot of potential, but it hasn't quite grown yet. But it's going to give you a lot of key indicators, key drivers. For example, you're going to see the GDP product increase. You're going to see employment growth increasing. For example, if in the news you hear a major employer coming to that area, for example, like Amazon, Amazon distribution centers opening up or something like that, is a key indicator that is going to bring a lot of growth, employment growth in universities, colleges, population growth. If there's a school being built, a recreation being built, indicators that a population growth is about to happen. And another thing is increase in rental demand. Now people are moving here to rent properties. There's international, because the Greater Toronto Area, actually Ontario, in Canada in general, there's a massive federal immigration strategy in place right now to bring in a lot of people internationally. So there's going to be a rental demand, and also decrease in vacancies. A lot of properties that are, again, not a lot of properties that are staying empty, and increased rents, that every year you see the prices, the rental amount is increasing. Making sure your property purchase demand is high, like the cycle that we're in right now. There's constantly buyers lining up and less inventory that's in perspective. So it shows you there's some indicators that this is a really hot area for you to invest in. And then again, just naturally increase in property prices, right? So these are in almost in the right sense. If you keep all of these in this order, if you collect these information and get them from just Googling, reading blogs, census data is very important. You can look up the municipality and start Googling to collect a lot of these information, and it'll help you kind of bring all of this information together to help you make an informed decision about your investment strategy. The next thing I wanted to talk about is, sorry guys, my computer. One thing I wanted to, before I get into some of the learnings, is that I wanted to share this quote with you. It's from a book called Secrets of the Millionaire Mind. I'm actually reading that currently right now for our book club. If you're not aware, I do have a book club that I just recently started, and we're going to have our first book review in 2 weeks from now, March 17. If you want to, you can find us on Facebook. It's called Book Club for Real Estate Agents. And we're talking about this book, and I'm really happy that we voted to do this book first, is because it is a book that I read months, actually years ago, and I love that I'm reading it again, and it's giving me a perspective into understanding your money blueprint. I'm telling you this, anything, and this is why I'm telling you, a lot of people they weren't on the same page with their partner when it comes to real estate investing, is because it's how you understand money. So and in this quote he says, if you're willing to do only what's easy, life will be hard. If you're willing to do what's hard, life will be easy. And again, everything in life, there's a little bit of work that involves. You have to have an open mind. And I'll get into a little bit about why this book is so important, is he unpacks a lot of the way that your understanding and your upbringing of money. And this is going to relate very much into how you respond to your investment portfolio. And this is a really good segue into sharing some of Josh and I, our own learnings. One thing that we were so grateful for is we had our own mentors and people in our investment community of investors that were investing. So we were quickly able to learn from a lot of their mistakes, one. And two, we were able to find a system. That's why I encourage you to go read someone like Don Campbell. He has a proven system that worked, that had properties that could survive years, depending on market corrections, depending on the real estate REIT cycle, you want to be able to ensure that buy and hold strategy is for long term. So it has to withstand multiple different economical changes. So making sure that you're attaching yourself to a proven system. And knowledge is power, folks. The fact that you're here, learn, connect with people, and ask a lot of questions, and a lot of the questions, and read a lot of books. And sometimes you think about, oh, I need to go read real estate investing books. Actually, no, read books like The Secret of a Millionaire. Reprogram the way your mind actually works. A lot of what we do, folks, is it's all in your thoughts and how you feel about things. So before you are even open to real estate investment, the fact that you're here, you're already halfway there. So you're already checking in how you're feeling about things and how you want things to change in your life. And because when you own other properties that are business, but has a massive liability, trust me, there's going to be a lot of things in your life that's going to be challenged. And this is where a lot of our learning came from. And it was so important, like I said, your circle, your community of people around you will change because you start to talk and speak differently. I know, for example, there's people in here that have parents who are investors. You notice that they had their circle change. They spoke differently. It was a lot of tolls on them if you didn't know how to manage your own portfolio. And make sure that this is really, really important, folks. Your investment team, so your lawyer, your mortgage agent, every single contact that you're going to bring together in order to do your portfolio, you make sure you vet them. You ask them questions just like you're interviewing someone to hire them for a job. So remember, these people can break or make your business. They must have investment portfolios on their own on a personal level. If they don't do this for a living and if they're not real estate investors, don't partner with them, because trust me, I speak a different language because I own portfolios. So I highly recommend when you partner with people and your real estate agent, for example, obviously it's going to be you, hopefully, maybe not. Some people don't like to have business and personal mixed so much, so they might want to hire somebody to look after that. Maybe they're busy, I'm not sure. But sometimes you want to make sure that that's one of the key indicators, is that you align yourself. Because one thing that I tell you why that is too is that you learn from these people. I learned so much from my lawyer, my mortgage agent, from just because my mortgage agent now was able to pull out equity out of my principal property and was able to set me up for multiple properties because he was an investor. Does that make sense? Imagine if he wasn't. And project manager, you are a project manager. You're leading this portfolio, you're leading your project. This is why when Josh and I got started in this, Josh and I were two different people, my husband and I. We have two different skill set. This is where you want to dig deep into saying, okay, I'm good at this, I'm going to deal with this, you're good at this, or you deal with this, so that you can do everything. So you want to leverage the people around you. And this is why Josh and I, we lived further away, an hour or 2 hours away from our rental portfolio. So for us, it's really important that we had property management that is well known in the area, that are really good at what they do to take care of our portfolio. So I never have to walk into the property. I don't even know the people that live in there. The only people I knew that lived in there was the first time when I bought my first property. The first mistake I ever made was when I assumed the tenants and I brought it without property. The biggest mistake I did, and I had to clean house in the next couple of months. And trust me, I learned a ton out of that, and I did it legally. So comfortable, make sure you get comfortable with numbers. Cash flow is amazing. You want to get into a process that the moment you look at a property, right away in your mind, you should be able to do a simple calculation to know if this is going to cash flow or not. One of the things that I wanted to tell you when it comes to cash flow is make sure that you're looking at it from a perspective of not monthly. People say, oh, I'm only going to make $100. Oh, this property is not good. Actually, it might be really good. If you can even break even on a monthly basis, it's still a good indicator. Again, multiple facets go into this. That's why I can't tell you what is right or not wrong. But sometimes maybe you want to put a little bit more down in order to bring down your mortgage payment a little bit when it comes to mortgaging, so that your payments are less. And also, what kind of circumstances are you in? Are you able to, if you're at a deficit, are you able to put a little bit more in? Because remember, it's not just cash flow that matters for a portfolio, right? Mortgage paid on, asset appreciation. You're going to get a ton more back in value at the end. This is a buy and hold strategy. So what you put, the $100 you might put in every single month might not matter. So you want to look at it from a yearly, from a long-term perspective. And honestly, like, I cannot stress this enough, emotions over logic. Everything you do with rental portfolio, because sometimes you're going to get that tenant that's going to send you that text message and you're going to be like, oh, and you want to rip your hair out, and nope, you can't think like that. Ultimately, the mind, you're going to go straight to the Tenancy Act, and you're going to say, step 1, step 2, step 3, this is how I'm going to deal with this situation. So get in the habit of questioning and asking questions and thinking from a business perspective, what do I need to do in order to mitigate this issue, rather than, you know, feeling all of that feeling that you're having. And trust me, I did. Josh and I did for months. Actually, for the first year, a good year, was always complaining, thinking, did we do the right thing? Oh my gosh, like, because we're new investors, we had no idea. But then we started talking to a lot of people about our problem. They're like, that's your problem? I had my first property, I had $40,000 in debt, you know, and you're like, what? So we're like, oh, I'm talking a couple of $100 and I'm freaking out. So trust me, guys, I've seen far, far worse, and not in my own portfolio, but because I've seen far, far worse through other people that I was connected to. Again, that community matters, and the people you speak to and the people you surround yourself with, hence your portfolio will thrive. Here's a little bit of our story. In 3 years, we were able to have a portfolio that increased by $150,000 per property. We were able to increase, we had 100% control of our cash flow with tenant turnover, which we control, not waiting for them to leave. And a lot of, I don't want to talk about that because I can open a can of worm, because there's some, you know, first question, I work with a lot of you guys, real estate agents, and some of my agents call me and ask me, hey, because you're an investor, I'm working with an investor and they have a tenant in their home and they want to sell or they want to buy a property with tenant. What is your, and then, you know, I sit on the phone with them for over an hour talking to them about different ways, so why that's good and bad, right? So there's, and you want to always go, and like if you're in Ontario, our laws aren't in favor of the landlord, so you got to think a little strategic. So anyway, so there's tenant turnover, which again, you can at some aspect have control over that. You need to talk to a paralegal about that, and you can do your own upgrades to bring in some cash flow as well. Minimal upgrades, strategic upgrades, and then you can also decrease expenses through efficiencies. We got in, you know, toilet that was efficient. We were able to think of, you know, changing the light bulbs, like LED light bulbs. Think of different ways you can decrease cost over time. And those are some strategic ways you can apply in ways to make minimal changes to your expenses that could save you over time. And with this, again, I'm going to dip back to Harv Eker's, you know, book's quote where he talks about the secret of the millionaire mind. Again, everything is rooted in your inner world, which is your thoughts. So your income can grow only to the extent that you do. So Josh and I, as our portfolio grew, we grew as people, and we learned a ton, and that's by having an open mind, and that, trust me, nothing is a problem until you make it. So I hope that was helpful for you. If you have any questions, I'm happy to take them.